Investors, hello. This is Stock AI Insights Earnings Analysis. I'm your chief AI analyst. Just a quick reminder, this is for educational reference only and not investment advice. Investing always involves risk. Today, we're diving into Pony AI's Q3 2025 earnings, which dropped on November 25th. And wow, the big story here is a massive cash infusion and a truly game-changing milestone.
Okay, let's jump right in. The single biggest event this quarter was a huge capital injection. Pony AI's dual primary listing on the Hong Kong Stock Exchange pulled in over $800 million. That makes it the largest IPO in the entire autonomous driving space this year. This is basically the rocket fuel for their super ambitious expansion plans. And the CEO, Dr. James Pang, left no doubt about what this money is for. He called it the dry powder needed to hit the accelerator on mass production. So, the big question is, how are they actually using that capital to drive growth? Well, that leads us perfectly into our first section, how Pony AI is putting that capital to work with the powerful strategy they call the Flywheel effect. The top-line numbers are seriously impressive. Look at this chart. Total revenue hit $25.4 million, which is up a whopping 72% from last year. But the real story, the one to watch, is in their Robo-Taxi services. That segment just skyrocketed, up almost 90% to $6.7 million. This is their core business, and it is absolutely taking off. Now, this kind of growth isn't just luck, it's by design. The company's whole strategy is built around this flywheel concept. It's a self-reinforcing cycle. So first, you expand the fleet. More cars on the road leads to more orders in a smaller area, which means shorter wait times for you and me. That makes for a better experience, which in turn boosts revenue and makes it a no-brainer to expand the fleet even more. You see? Each step just fuels the next one. And listen, this isn't just some theory they have on a whiteboard. On the earnings call, CEO James Pang confirmed it directly, saying, "We have already seen the flywheel in action." He's connecting the dots for us. More cars, more users, more revenue. The strategy is already delivering. And here's a fantastic little bit of proof. The management team? They actually showed up to host the earnings call at their Shenzhen office in one of their own fully driverless Gen 7 robo-taxis. I mean, that's a powerful statement. It tells you their tech isn't just a lab experiment, it's a real functioning commercial service, right now. So what's the magic behind this rapid scaling? A big piece of it is something called Pony World. Think of it as an incredibly realistic virtual world, like a super advanced video game, where their AI driver can practice over and over again, learning and improving all on its own. This lets them adapt to new cities and tricky traffic situations way faster than if they had to rely only on real-world driving. Okay, let's pivot and talk about profitability, because this quarter gives us a really fascinating contrast, a huge operational win set against a pretty challenging overall financial picture. The single biggest headline from this entire report was this: Pony AI reached citywide unit economics break-even in Guangzhou. Honestly, this is a massive deal, not just for them, but for the entire autonomous vehicle industry. So what on earth does UE break-even actually mean? In simple terms, it's the magic moment where the money a single car makes in a day is finally enough to cover all of its daily running costs: the hardware, charging, maintenance, the whole shebang. It's the proof that the basic business model can, in fact, be profitable. Look at this chart. It perfectly lays out the big tension in this report. On one side, you have this micro success. Each car in Guangzhou is now paying for itself on a daily basis. But on the other side, you have the macro challenge. The company as a whole posted a net loss of $61.6 million. They've proven the model works on a small scale. Now they just have to scale it up. And despite that net loss, there are some really positive signs on the path to profitability. Look at this chart. Gross profit more than tripled, and the gross margin literally doubled from 9.2% all the way to 18.4%. Management says this is because of a better revenue mix, with more money coming from their higher-margin robo-taxi services. So, that brings us to the most important question. How do they get from a single profitable unit to a profitable company? The answer is all about massive scale, which brings us to their guidance for the future. As you can see on this chart, their growth plans are nothing short of aggressive. They went from about 270 vehicles last year to a target of over 1,000 by the end of this year, and then they're aiming for more than 3,000 in 2026. This is the kind of exponential growth that can take that unit economic success and make it profitable for the whole company. Their plan to get there has a few key parts. They're going to pack more cars into their main cities like Guangzhou and Beijing, expand to new markets, and this is a really smart move. They're going to use an asset-light model by partnering with other companies to own and run the fleets, all while, of course, pouring money into R&D to keep their technology ahead of the pack. Of course, a plan this ambitious doesn't come for free. It involves significant costs and risks. So let's take a clear-eyed look at the financial headwinds Pony AI is driving into. Yeah, scaling a deep tech business is incredibly expensive. Their non-GAAP operating expenses jumped to $67.7 million. Now, management said this was driven by necessary spending on R&D and hiring more people. It's also worth noting this number includes a one-time development fee of $12.7 million for their new vehicles. And you can see this spending reflected in their cash balance, which went down by $160 million this quarter, and that was before the IPO money even landed. Now, some of this was for one-time investments, but it really shows you the significant ongoing cash burn required to run the business and build out the fleet. That IPO cash gives them a very critical runway. And beyond just their own financials, Pony AI is up against the same major hurdles as everyone else in this space. Management was pretty open about these on the call. They talked about the high barriers to entry, the long and complicated process of getting regulatory permits, and the huge technical challenge of building a system that can safely handle every weird, unpredictable thing that can happen on the road. But despite all those challenges, leadership remains really optimistic. Dr. Pang wrapped up his remarks by doubling down on their commitment to scaling fast and creating long-term value, calling 2025 a pivotal year for the whole operation. So, my verdict, Pony AI has officially proven its business model works on a per-car basis, which is a huge step. But now, it's in a high-stakes, incredibly expensive race to make the entire company profitable. The real question is, can they navigate that costly road to scale fast enough to stay ahead of the competition? Let me know what you think in the comments. See you next time.